welcome to this MTSS Vlogcast series. I'm Lisa Collins, one of the co-founders of MTSS, and I'm really pleased to be joined by Deep Cambay, who is the founder of Regenerating Business Today. Now, in today's episode, we're going to be looking at how to unlock financial capital alongside ESG initiatives. Deep, welcome. Thanks for being with me again. Deep, can you talk us through just some of the different types of ESG funding that's available and out there for organisations?
Yeah, and I think, it's important maybe just to put some context behind this access to finance. And this has all been driven by that kind of investor interest and, having more scrutiny around E, the S and the G in understanding risk and opportunities in those areas. And there are more and more investors that are wanting to invest their money into businesses that are working in the space of improving impact across lots of different areas and across the industries. And there are a number of different types of funding that can be accessed through investors, banks, etc. And one of them is sustainability linked loans. So what that means, it could be, your bank giving you better rates when loaning the money to your business, but what you will have to provide evidence for is certain aspects around your E, S and G credentials. You have to provide performance and improvement kind of in line with your agreement when it comes to your investment funds. So they want to see the return on that economically, as well as showing, that what you're investing is improving impact as well. So that's one. Companies, examples of companies that have accessed funds in this way, like Adobe, Autodesk, Viacom, all sorts of different companies that are already accessing this type of fund. Other funds would include bonds, so specific green bonds. And one example of that is Apple. So they have accessed green funds to put into improving the infrastructure of renewable energy. So being able to have the majority of their operations kind of operated with renewable energy across their full value chain. And they've been issued quite high amounts, $4.7 billion worth of green bonds have been invested in this area with Apple, which is quite a big...
Yeah, and what have they got to do to justify that?
Well, they've got to have evidence against, how are they improving their energy efficiencies? How are they investing in green buildings, so the properties? How are they reducing waste? How are they managing water? So it's basically it's based on the bond that you are awarded, what criteria goes with that, depending on who kind of provides that bond for you. But it is scrutinized, so they will have to be reporting on this and being able to evidence the agreement of that investment and what they've directed that into.
Interesting.
Yeah.
Are there any others?
There are. I mean, off the top of my head, I can't think of any more. I think Burberry have also, a clothing company, have green bonds, but there are a number out there, and they're growing. It is a growing source of funding, specifically in the E, S and G space. It's quite interesting. but it's ever evolving.
And where would somebody go if they were looking for funding?
Well, down your traditional routes, your banks, investors, angel investors, venture capitalists. I would look, if it's specifically ESG that is of interest to businesses and wanting to get investment to be able to unlock and improve in those areas, I'd look at the world of impacting investors who have got specific interest in this area.
Interesting. And I expect more to come when it comes to funding for ESG initiatives.
Yeah, absolutely. I mean, there are also initiatives where companies are linking bonuses and remuneration to their ESG impact performance. So it is creating additional accountability to perform.
Excellent. Thank you, Duke. Really interesting as always. And thank you for joining us today. Please join us again for the next episode where we'll be taking a look at that grand old world of greenwashing. We look forward to seeing you then. Thank you.